Hi, good evening, everyone. Jeremy here from Quant Strategic Singapore, and this would be a market recap for the S&P 500 for 2020. And today's special edition, I would like to focus on the gains that were made in 2020 and how you can actually manage trades on different time frames. All right. So starting with the long-term charts, this is the monthly chart of the S&P 500 and very nice uptrend on the S&P 500, even though it has been a very volatile year. But we did close off the year at 3759, which is at all-time highs. All right. So perhaps you can start the discussion after Lehman in 2008, 2009, and there was a particular long signal here that was issued on the 1st of December 2010, the closing off on December, where you actually broke the downtrending super trend line into an uptrend super trend line. And there, after which, if you had built a portfolio and held it as long as price did not violate this particular super trend line, all the way till 2018, all right, you would have made a very handsome profit of 107% or 1,298 points. All right, so that's very nice return for an 8-year period holding till the 3rd of December, where the super trend line was violated right here. Exited your positions, you have pocketed 107% on your investment over the past 8 years. All right. And after you have exited, the next entry that you would want to have would be somewhere in 1st of November, the month of November, at the level of 3067. However, investors that came in 8 years later after Lehman faced this particular correction right here during the pandemic this year, where the S&P 500 tested 2,200 and then had a full rebound all the way till all-time highs at 3,759. Now, throughout this particular pandemic on the monthly chart, you would have not taken any signals on the monthly chart for 2020, and the long signal would only be issued after the December close of 2020. So in general, if you had taken this particular trade in 2010 and held it 2018, and thereafter went long again in 2019, stopped out during the pandemic, and closed off the year with that entire just one trade, two trades, okay, you would have made 961 points net, which is your 1,298 points minus off the 336 point loss on the pandemic drop. All right, so 961.4 would be your total profits trading on the monthly charts alone. Some people may prefer this because it is less taxing. You probably have to see your charts maybe once a month, all right, and adjust your positions as the month closes, and which means to say that you probably have to stare at your charts maybe 12 times in one particular year. Not bad for 8 years of work with 107% profit. But what happens if you want to actually increase your profit 961.4, and I'm going to show you how you can do that on the weekly charts. All right, so this is the weekly charts of the S&P 500, and as I was discussing with you, say you traded the monthly charts since 2010, 961.4 points. Are you able to increase that? Yes, you can. All right, and from this particular presentation, I started the weekly chart trading from 2010, the same time as we took that particular signal post Lehman. All right, and you did the exact same thing. All right, having your longs during the signal and covering your longs when the super trend line was violated. All right, So you can see in 2011, you gained 51 points. 2012, you lost 46 points. 2014, you made a whopping 463 points. 2015, minus 37, and so on. 2018, very good year, returning almost 478 points, or 25%. And of course, 2020 trumps the returns at 29%, or 884 S&P points at the close, 3759 last week. All right. So your total profits, if you add them all up, is 1,793 points. All right. Almost 80% profits higher than just trading on the monthly charts. All right. So it takes a little bit more effort because you probably got to review your charts on a weekly basis. All right. So as long as you put in your trades and review them on a weekly basis, put your first trades in at the market close on Friday evening, which is quite difficult for Singapore investors, or the Monday opening. All right, you would be able to generate 1793 if you had judiciously and had the full discipline to take the long signals when they come and exit your positions, place your stop losses at all the points of the super trend line break. All right, this is how you manage your trade. For those of you who would like to know more in details as to how to take trade signals and to execute your trades, you have to contact me on my website. And I can tell you a little bit more as to how you can employ this particular technical analysis using Ichimoku clouds as well as the super trend line for you to manage your trades. So zooming in on this particular year, 2020, you can see that we had a fantastic return, all right, of 884 points from last year's long signal, okay, which you have made 301 points and held it till the pandemic drop. You would have been stopped out right here at about 3,200, taken a breather. The pandemic would have pushed it down to 2002, all right, and thereafter taken your long again here on the 1st of June this year, 6 months ago, and the target was new all-time highs as I posted over the past couple of months, and indeed we have hit new all-time highs. So if you add up this particular trade here in 2019 and 2020, you would have had a very, very nice return of 884 points, or 29%. And what is the prospects of the weekly charts moving forward? Well, the long signal on the 1st of June 2020 is still valid, very, very strong. As you can see, higher highs, and of course, new all-time highs. The first support for this particular weekly move will be at 3508 and 3380. All right, so 3380 is the pivot point. If this particular pivot breaks, all right, then you'll probably have to close off your portfolio positions and thereafter wait for another entry whereby price action will break above the super trend line again. Otherwise, if this trend continues, okay, to make all-time highs, that will be very positive for the S&P 500 moving forward into 2021. So continuing on from a discussion from our medium term, and as I discussed the dailies chart, there will be questions that you'll be asking. So what happens if next week the S&P 500 opens and there was some news flow that caused the S&P 500 to correct? Where will you be stopped out? All right, so your current stop would be at 3380, which is the pivot right now for the weekly charts. All right, so if the S&P 500, let's say if we had some bad news next week, it could actually pull back and knock you out from this trade at 3380, which was your stop loss. All right, just like how we stop ourselves out from all these particular points way back in the past 2 years. All right, and if that happens, your profit will be reduced to to 197 points from 583 points. All right, this is just for discussion so that I can explain to you why people actually trade smaller and smaller time frames. So a drop of 583 point profit to a 197 point profit, reducing your gains from 18% to 6% is pretty painful for the entire year of 2020. So what can you do about it? So zooming in on the daily chart of the S&P 500, which I know most of you are using, you can see that on the daily charts, if you use the same technique which I've discussed throughout this entire past couple of months, is that if you follow the same strategy, you would have come up with a profit of 445 points, which is a gain of 13.84% for the year 2020. So this is for 2020 because it's a daily chart. And even if you have some bad news that came out over the next couple of weeks and you were stopped out at this pivot at 3653, your profits would have just been reduced to 445 points minus off that particular 100. You will still get 345 points for the year if you get stopped out right now. All right, versus the weekly charts, if you had a stop loss at 3380, it will be at 197. All right, so trading on the dailies chart, all right, trading on the dailies chart will definitely protect your profits, but it requires more work because on a dailies chart, you probably have to put in trades on a daily basis and monitor the markets more closely. That puts you closer to a trader rather than holding the S&P 500 as a portfolio. So as you can see, exponentially on the larger time frames, you don't need to work as hard, but the profits are not as high for active traders that take signals on a daily basis or even on a 4-hourly basis, where their profits are much higher, but it requires a lot of technical expertise as well as a lot of work and discipline. All right, so once again, if you do close off the year and something does happen and you get stopped out at your pivot at 3653, your profits will be at 445, versus if you get stopped out on the weekly charts next week, for example, you could actually be down to 197 points on your profits. This is the reason why people trade on a smaller time frame. So zooming in on the dailies chart, what to expect for next week. I see this pivot here, very important, 3653. And if price action continues moving up, really good for the S&P 500. If not, we might test this pivot at 3653 and thereafter test the base of the SSSB line, which lies at about 3480. And to sum up our discussion, looking at the shorter frame 4-hourly chart, which is the base chart that I use for my trades, you can see that there was quite a bit of choppy trading over the past month, and we had a short signal on the 21st of December, and then it turned long again, all right, on the 28th of December, targeting new highs, of which we closed at 3759. So what is important right now is that this pivot of 3725 must be watched. Same thing, if price action on the 4-hourly charts continue upwards, very bullish. If not, it may test 3725 and then the SSSB line, which is around at 3685. All right. So to sum up our entire discussion for today, for year 2020, on the monthly charts, bullish action, very beautiful close for December. You can see a new long signal on the super long-term charts. 1st of December, the month of December closed above the super trend, expecting it to continue higher. And on the medium term charts, also very bullish, continuing higher with a pivot at 3380. And hopefully we get even nicer green candlesticks for the next couple of months for the medium term charts. And on the short term charts, we do have some pivots here at 3653 for the daily charts, as well as on the 4-hourly shorter term charts, 3725. So I just want you to take note that you can actually adopt a weekly portfolio, a monthly portfolio, or a daily portfolio based on your choice. If you want to actively manage your trades from a monthly or weekly or daily or even on 4-hourly basis, the profits are definitely higher, but you're going to work a lot more. So for those of you who don't have much time, okay, I would recommend you a higher time frame for you to take the signals and just sit through and accept that you have a decent profit, but less work, but less profits as compared to shorter term trading. All right. And for those of you who even trade on a weekly basis or a daily basis, you can actually take profits and close your trades on a different time frame. So you could actually be long on the daily's chart, continue on this particular trend, but not exit at 3653, but exit at 3725 using the 4-hourly charts as your exit point. In that way, you can protect your profits much more than just taking the exit point on the dailies. But if what you're doing right now is protecting your profits, but you may not be able to ride out the entire trend of the dailies. All right, so more details are available for mentoring and coaching. If you do need help, contact me on my website to get to know more as to how you can manage your trade on multiple time frames, as well as the use of super trend lines for your stop loss, as well as trend indicators, and the use of the Ichimoku cloud. All right, so that was the summation of 2020, and we expect another great year for the S&P 500 for 2021. All right, so for those of you who have not visited my website, please do so and click on the bell and look out for my next video. Thanks a lot and have a great week.